What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here's TSLA, Tesla. This finishes at $205 today. That is down 7.55%.
And it's gone.
So we haven't analyzed Tesla in a while here, probably a few months. But recently, the stock has gotten beaten down very significantly due to a lot of factors. Just the overall markets being really bearish, especially tech. The Tesla day, where they introduced their Optimus robot, turned out to be a sudden news event, and also everything with the Twitter drama. Tesla investors don't like Elon Musk owning Twitter because it means his attention will be elsewhere. So a lot of reasons why the stock hasn't been doing well. Today, another massive sell-off, and now we are at a yearly low. So this is very unfortunate, very nasty, but it appears like now is a good time to buy the dip, which we'll get to in a second here. This was number 4 on StockTwits today. Had over 3,000 mentions, so once again, we're going to analyze it. All right, let's jump right in. Let's go ahead and analyze here. So first of all, we have a cup and handle in the making. I can't really say where the bottom of the cup is because this is still selling off, but it appears like pretty soon this should start to bottom out, catch support, and reverse. So the bottom should be somewhere around 200-ish. And there can be multiple possible tops. It can be 234, 246, 255, 288, or 314, and longer term, this is part of an even bigger cup and handle where this should eventually come back up to the high of 415. But those are all bullish indicators that is telling us that the stock should come back up to one of those tops to complete the cup. And then we have a double gap down. First gap down was back at 235, so that's a bullish indicator that is telling us that the stock should come back up to 235 to fill that gap. And the second gap down was back at 262. So another bullish indicator that is telling us that the stock should come back up to 262 to fill this gap. And both of those gaps should fill in the short term. The RSI, the relative strength index, is currently at 25. So this is officially in oversold and undervalued territory. It has been for a week now. So the RSI is currently a bullish indicator that is telling us that the current price of 205 should be a lot higher. Here on the MACD, the moving average convergence divergence, the MACD line is below the signal line and is pulling away. So that's a bearish indicator that is telling us that it may be time to sell. And here we have a descending channel forming, where the upper channel is currently around 220 and the lower channel is currently around 195. So if this breaks 220 to the upside, that would be bullish. And if this breaks 195 to the downside, that would be bearish. So the descending channel is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is sitting on the support of 205, which it finished at today. So if this goes to the upside, next levels of resistance would be 207, 209, 211, 213, 218, 221, 223, 225, 227, 229, 231, 233, 234, 237, 240, 243, 246, 250, 252, 255, 257, 259, 260, 262, 265, 268, 272, 275, 277, 279, 281, 283, 284, 286, 288, 290, 293, 295, 298, and then 301. There is resistance above 301, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 201, 198, 193, and then 188. There is support below 188, but we're not going to discuss that right now. So right now with the current price, 205, the channels to the upside and the downside are pretty decently sized. So expect a regular amount of price action, either way this goes. And this did 94 million in volume today, which is above the average of 77 million. So the sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So again, it's been really rough for this stock all year, but really in the last 2 months. But this is Tesla, a blue chip value stock. It's not going anywhere. This will have its day again. Just a matter of when, not if. Again, we have way more bullish indicators than bearish indicators. We have bullish indicators in the cup and handle, double gap down, and RSI. We have a bearish indicator in the MACD, and one neutral indicator in the descending channel. So technically, based on the charts, the stock looks very bullish in the short and long terms. So therefore, if you want to go long, not financial advice, the current price of 205 is an excellent entry. Again, a lot of bullish indicators, yearly low, oversold, undervalued. So in the short term, this has the potential to come back up to 262 to fill the gap there. And from the current price of 205, that would be about a 30% upside potential. So a pretty good amount of upside potential here in the short term. And it's pretty hard to tell how low this may pull back, but there appears to be some very critical support at 193. So let's just call 193 the bottom here. It's going to take a lot of selling pressure to break that. So from 205 down to 193, that would be about a 5% downside potential. So this really shouldn't go too much lower in the short term. So I would say going long at the current price, 205 would be a low risk, high reward play. Definitely worth a shot in my opinion. You really can't go too wrong here. It's pretty clear cut. This is a great buying opportunity. So I can support going long at the current price, 205. And if it pulls back, then you can just average down at these supports that I mentioned before. Now, if you want to go short, not financial advice, I would not do that, and I would not recommend that for all the same reasons that going long is a good play right now. Going short is a pretty bad play. Again, a lot of bullish indicators, oversold, undervalued, yearly low. Again, in the short term, this may come back up to 262, which would be about a 30% upside potential. And again, in the short term, this may come back down to 193, where the critical support is, which would be about a 5% downside potential. So I would say going short at the current price, 205 would be a high risk, low reward play. Not worth it in my opinion. You should have went short anywhere in the $300 to mid $200 range. And here at 205, it's a bit too late to go short. You missed your chance. And going short now would probably result in you getting burned. So if you want to go short, please do that at your own risk. And it would definitely have to be for a quick scalp. Get in, get your money, get out. But honestly, I don't see why you would go short here. Seems like a really bad idea. So I don't like the current entry of 205 on the short side. But I will say, if/when this does come back up to 262 to fill the gap there, then I think that would be a pretty decent price to start shorting this down. So in summary, guys, this is a great value stock here that's been getting wrecked lately, but now this appears like a good buying opportunity. As a wise man once said, buy the effing dip. So going long at the current price, 205, appears to be an excellent play right now, and going short appears to be a very dangerous play. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is TSLA, Tesla. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.